Good morning, everybody. Today is March 24th, 2023, and this is my experiment investing $1 a day in 10 different cryptocurrencies and $1 a day in 55 different dividend stocks. This is dotted white line. This is the start of the day, and you can see that it's been steadily going down, way down. Look at the week, and you can see that it's been going up and then down. Look at the 1 month period, and we can see it's actually been steadily going down for the month. And we look at 3 months, and we can see right here, January 6th, 2023 is the first time I invested in my life. February 20th, 2023 is when it really started to go down and dip down. And then Silicon Valley Bank went bankrupt. And then March 11th, the Fed decided to bail them out. And then Credit Suisse started to go under around March 14th. And then maybe they bailed them out. And then right around here, March 22nd, is when the Fed announced a 2.25% increase. And you can see that it's been going in different directions. Now, if you enjoyed this content, please feel free to leave me a comment. Smash the like button. Don't forget to subscribe. I'll be posting a minimum every Monday and every Friday, sometimes Wednesdays. Now, if you can look right here, you can see Robinhood is trying to give us a 4.4% average per year in investment in cash. And also, my bank and several other banks are trying to have incentive to increase. So if you put enough money in your savings account or you try to put in a CD, they're trying to push this incentive to keep your money in the bank, which is, I think, a good idea in a sense, because if everybody decides to go and do a bank run and pull all their money out, there could be a huge lots more banks that could possibly be crashing. So they're trying to make it so that you don't pull your money out and have the incentive and keep it in. And when I say bank run, a bank run could be literally just taking your money and purchasing something else. If you take all your money out of your banking account and you put it into like cryptocurrencies, or you put it into stocks, or you put it into other things, or maybe you're buying gold, or maybe you're buying silver, those is the same thing as pulling your money out of the bank. And the bank needs the money in their bank to balance their books, so that they have enough money there so they can support other people when they absolutely do need to pull their money out, such as businesses and such as yourself if you have more than $250,000 in the bank, FDIC insured. So keep that in mind, that is what's going on right now. The banks, or wherever you have your money and they feel they're in trouble, they're trying to keep you and have incentives to keep your money there and not pull it out and put it in other places. So you can probably find some pretty good deals right now, be it if you go to certain banks, shop around. Those type of things are in the works right now. So like I was saying before in some of my other videos, when things start going down and people start panicking, opportunity arises. And it's there as long as you're willing to work, shop, and do your own homework and then figure it out for yourself. So that's the type of things that are going on. Now let's go back to what I'm doing, investing $1 a day in 10 different cryptocurrencies and $1 a day in 55 different dividend stocks. And why is it so important for how I am doing it? Now, my original plan and my original goal was to set it up and set it and forget it. And when I say set it and forget it, I literally mean coming in and saying I want to come over here and then scroll down, and you can see right here for view my recurring investments. And you can see that I literally have everything scheduled for $1 a day, $1 a day. So $1 a day every single trading day, every Monday through Friday, and $1 a day every single day for cryptocurrencies, because cryptocurrencies trade every Saturday and every Sunday as well. So here I am. I'm just doing $1 a day. And when I say set up a subscription, my original plan was to set it up kind of like how if you set up a Netflix reoccurring, like a subscription, right? So if you set up a subscription with Netflix, you're just paying it every day, and you don't even think about it. Or you set up a subscription for the Amazon account, or whatever it is. I was trying to treat the stock market the same way, as I was just gonna set it all up and just not look at it and forget about it. But here I am. I'm recording YouTube videos for the first time in my life, and creating content to share my own experience and my own journey going through this process. Now, I'm not telling you to buy or sell any of the assets. I'm not a financial advisor. This is purely as entertainment to see what is going on and sharing my life stories as I go through this particular process. Now, I did pre-record a video yesterday to show that I changed the order of how all these went through and how they're actually organized. Let me go ahead and I'll merge these two videos together so that you can have it and experience what I did yesterday. Okay, what I want to do here is I want to take everything from finance, and you see this finance one right here. I want to start organizing these from top to bottom in my actual list. So the first one here is going to be JP Morgan. So I'm going to scroll down here and I'm going to look for JP Morgan right here. And I'm going to move this all the way up to the very, very top. The top. Okay. And with the power of some magical editing, you can see right here, I've now put all the financial ones here at the top, from top to bottom. Now the next step that I want to do here is I want to order them from highest paying dividend to lowest paying dividend. So let's go ahead and do that now. For example here, I'm going to go ahead and take VNO, and we're going to move VNO to the top. And then let's go ahead and let's take the rest and do the rest. And voila. So now we have all of our financial ones at the top, and we have it from, if we go into VNO, and we go over here and we look at dividend yield, we can see that this is the highest paying dividend yield for the top one, and then we go to the next one, and this is also a finance one, and then we can see that this one's paying 13%, then we go to the next one, and this is how they're organized. So now let's go into the next section. So come over here to this actual profile here. Let's scroll down. Let's look on energy and water. Let's move energy and water just under that. And we'll start with Chevron. Let's go ahead and move Chevron to that top section. So we'll go ahead and we'll look for Chevron. I can't remember which Chevron was. That's Devon Energy. CVX. That's got to be it. Chevron. So we're going to now take Chevron and we're going to grab it, click and hold. You can do it with your finger on your phone. And come over here to where Coca-Cola was, and we'll put it right under there. Right here. And we'll do some magic and get the rest in there. Okay, and with some video magic, we've gone in here and we've now organized everything from top to bottom in their specific categories with highest paying dividend to lowest paying dividend. I'll come over here and I'll bring down this right here. We have finance. We go for finance from highest paying dividend. So right now, this changes as the market goes down or as the company goes lower or their dividend yield percentage goes up. I'll show you that down below. When you can see finance, I have everything organized in that way from top to bottom now. So we have our finance all the way organized this way, and we have energy and water. So we go down to DVN and we come down over here to DVN, and you can see DVN is now organized that way. And then we come over to down to ED, and then we go to consumer goods, which is Hanes Brands. I'm actually understanding all these different codes now a little bit more, and I can spot them. So we have Hanes Brands, we go down, and then we can go down to consumer goods. We can see consumer goods, CBD. Then we have tech and media, and I actually see one in here where I actually probably want to change out. So Seagate Technologies, okay, in a sense from my own personal opinion, but I'm thinking of Western Digital. I'm going to go look up to see if I can find the Western Digital ones, because personally I like Western Digital hard drives, as Seagate has constantly failed me throughout many of my years of working with hard drives and computers. So I'll look up Western Digital and see if they're even a company. And then I also was thinking of investing in Apple. So if I come over here to tech, and I come back over here, and I scroll down here, and I go to tech, media, and telecom, 3 companies I'm highly interested in is Apple, Microsoft, and Nvidia. And I may do AMD if I can even find it on the list. But those ones interest me, and if they all pay dividends, I'm definitely interested. Nvidia is definitely up there. I've always liked Nvidia graphics cards for gaming. Mainly gaming, because that's all I ever do. So something I'm definitely interested in. Maybe I'm going to do and actually try out. Come over here. We can do healthcare, so MPV, Pfizer, ABBV. And we can see right here, ABBV, Pfizer, And then we also have business for Intermountain, and then we have our every month paying dividends. Now, I think almost every single one of these monthly paid dividends are actually should go up here in the finance section, but I separated them in their own category down here so that I always know that these dividends right here are always going to pay monthly. Now, before I had already done it where I've organized it where EFC was the highest paying dividend, but as you can see, as the companies have changed and have lost how they work, their dividend percent goes up because they lost money. And let me show you that right here. So if I go over here to SLG, right, SLG now pays, before when I first bought them, they now have a higher dividend yield, but that's mainly because when this price goes down, the actual price per stock goes down, the dividend yield percent goes up. And so that's where the higher risk is. But it's also based on this as well, because you see right here, Q1 paid out $1.87 average, Q2, Q3, Q4, but Q1 of 2023, they went into the negative. So expected, negative 66 because so their dividend yield may be higher, but there's a higher risk. So you have to understand that the dividend yield changed. The same thing like how Reality O was actually at a 3% dividend, but because the stock market's going down, the dividend yield percent goes up. So you really have to understand that dividend yield don't chase the dividend yield number. I just sorted it this way, and so the reason why I sorted this way is for me to easier see it, as well as now that I have them all set this way, because EFC was the highest paying dividend yield, but now it's not, and We're Good was the second highest paying dividend yield, but now it's going down. So why is Good going down? Good's going down because if we come over here, even though this shot up and now it's going down again, based on their average dividend yield per stock that they sell. If it lets me go down, come on. Come back over here. Trickiness on this application here. So if you look over here, it's a 12.55. Did I put 12.55? Yeah, 12.55. That's what I have right there. 12.55. But they're paying a less of a dividend, but they're paying monthly. So it's interesting to look at. So you have to do your own research. I just organized this for me. I don't expect them to stay from highest to lowest, but I organize it for right now so that I can come back and double check myself. I'll keep these numbers handy for myself in my own records, and then I have them all segregated in their actual buckets. And now I can make the better of, now I need to rebalance out, because I do definitely want to invest more in tech, media, and telecom. Maybe not telecom, but tech and media, because I'm looking at Apple, Microsoft, and Nvidia for myself. Now, this is not financial advice. I'm just doing it for my own personal, what I want to change out. And then there's some here in finance, which I may not really want so much. Now, I know JP Morgan's probably going to be pretty solid. UDR will probably be pretty solid, but you never know. And then some of these upper ones right up here, like Vornado Trust and ABR, maybe those ones I might actually slow down and or keep for now and then just add to it. So just a lot of decisions to make. But I wanted to make sure that you saw what I did, because now the look is going to be very, very different, and it's going to be organized very different. And so I'm pre-recording this. That's why you don't actually see the date or time in the bottom right like you normally do, because I'm going to add this video to my other video that I'll record tomorrow so that you'll be able to see the actual day. Let me go ahead and make sure that you can see that this is for this day. It's already 7:35 p.m. for my time right now. But I've been working on this for some hours now. And you can see right here, here's the week, and it goes up and down. You can look at the month, and you can see it's been going interestingly. Look at the 3-month period, and you can see right here, it's just shot way, way down on the 22nd, and then it's doing its thing. The more interesting thing that I see here too is like Bitcoin. Bitcoin, for example, if we check the week, here it just pummeled right after the Fed announced it, and then it kind of just climbed its way back up. Interestingly, it dropped down to like, what is it, 26, and then now it's back up to 28. So interesting, where people are possibly putting the money. You can see that people are putting their money in where they're putting it. Now, another thing that I plan to do too is, for example, I'm pretty sure I think I want to get rid of AVE. I may just sell it at a loss as it is, and I know I want to get rid of comp, and I may just sell that at a loss too, and just take tax loss harvesting on them, and or keep them until they gain a profit. I could do that. I kind of want to just get rid of them because I want to just have 10 cryptocurrencies. I know these are the 10 cryptocurrencies I'm going to stick with on the Robinhood app. There's other cryptocurrencies that are interested to me as well, but they're not on the Robinhood app, and I can't have it all in one section to show you as it is and do the $1 investment while also having what is the word I'm thinking of? Commission free. Obviously, Robinhood still takes its own portion as you buy and sell from them, and then I also want to get rid of this free Tesla stock that I got for free from Robinhood, and I want to get rid of this free stock I got from Amazon. I didn't spend any money on these. This is just what I got for free for signing up for Robinhood. So I picked a Tesla stock. Obviously, it's up $10.65 right now. So I'm thinking of just getting rid of those because I only want to be in dividend stocks in my Robinhood application, and I only want to be in those 10 cryptocurrencies. But I'm thinking I'm actually going to add 3 stocks to this list. So instead of 55, it might be 58, and then I might just change how that goes. So that's my plan right now. That's what I'm thinking. This is not financial advice. Do not take this as financial advice. I'm just doing this for my own self, and we'll see how that goes. If you enjoyed this content, please feel free to leave me a comment, smash the like button. Don't forget to subscribe. And we will catch you all in the next video. Thank you for being here, and have a wonderful day.